All right, hey everybody, welcome back to four guys talking about AI, talking as opposed to talking about AI.
We're super casual today, yes.
Yeah. I'm here with John Gerard, guy number 2 today. It's summertime, so many of the guys are rotating out on vacation or other business. Neil and Andy are out today. Last week it was Neil and me, and I was probably wearing the same shirt, which I'll henceforth refer to as my Friday shirt. Okay, so I'm not going to say the obvious that it was a big week in AI. It's always a big week in AI, although we say that every week. This week we're going to be talking about the open source Chinese models that have kind of taken the U.S. by storm and the fallout that's coming from that. Does that make the AI bubble worse? How much of a bubble are we in? We'll talk about that. And then related to that are some dubious accounting tricks that tech companies are using to conceal or minimize their AI spending debt. We will then move on to the impact of AI on the open web. What's the state of the open web, the health of the open web, and is AI accelerating the decline or downfall of the open web? And then we have some notes from the field from John about some wacky AI things. And then we'll conclude with a discussion, if we have time, about AI surveillance fashion, which is something that is emerging to combat the facial recognition and other AI surveillance cameras that are being deployed everywhere. Okay, so John, maybe you can take us through what happened with the Kimi K2, Kimi K3 Chinese open weight model that landed this week.
Yeah, absolutely. Boy, and listening to that list of things you're covering today, we've got some breadth here. We got some work to do, Greg. Here's the summary on the open weight models and the Chinese models that have come out. I think somewhat unsurprisingly, the models that are coming out at each iteration or generation are surprising everybody in terms of how good they are and how much better they are than expected. We've seen this just time and time again, where every time a new model comes out, either from the U.S. company or the Chinese side, there's all of this kind of mind-blown responsiveness. I think at some point we have to just realize that this is incredible and going to continue to be so.
DeepSeek and Manus were that way for people, when they came out.
Yeah, they really were. They really were. So at some level, I would say this is sort of more of the same. Everybody's mind is blown all over it. And the implications are pretty interesting. What may be going on behind the scenes, also pretty interesting. So the conjecture here is there's a lot of these companies are looking to figure out how to continue to do their AI coding and development, but without the huge bills that they're getting, in particular from Claude. Do these models offer an alternative at 10%, 5%, or even less the cost of using Claude's APIs? And this is a general sort of a concern for the US AI companies who have had to have these pretty aggressive API prices in order to start getting at least some revenue. So, what's going on here? Well, it could be potentially very disruptive. Here's a nuance that I think gets lost that will have to be solved. But when you're talking about models that are 5% as expensive, there's a lot of incentive to solve them. You can't just take something like Claude Code and take out their models and plug in, Kimi or one of the other Chinese open weight models. It's not the way that it works. Claude wouldn't want you to do that. And in fact, there's a lot more than just the model that is under the hood that makes these things go. On the coding side, it's called a harness. And a harness is really the set of instructions that tells the model how to approach coding projects. And I will say Claude Code and their harness is exceptionally good. And I would not myself want to be in a position where I was trying to recreate that harness and plug a Chinese model into it. I anecdotally happen to think that more than half of the capabilities that something like Claude Code have to do with the harness as opposed to the underlying model. And that may become even more important as these models achieve parity.
There's a claim which is being floated as the basis of a potential ban or some retaliatory action against China, that these models are all distilled from the US frontier models. I can't assess whether that's true or not. I do think actually, there Jensen Huang and Satya Nadella from Microsoft have come out and said the market needs these open weight models. The market, you should not try and ban them. And I think that that's right. I think that this is competition, right? I mean, the costs of using the major LLMs need to come down, and the market wants that. These companies want that. Now, what you point out about the other ingredients, if you will, under the hood, in terms of quality, is that you might get a bunch of CTOs or AI czars saying, well, we can use these cheaper models, but there might be some fallout from that in terms of,
Yeah,
you know,
quality.
right.
Yeah. Yeah, I think that's right. And I would even add to that that I think that each of these harnesses have a personality, you could say, that you become sort of used to as a developer. And so there's a switching cost just associated with that. Like I can count on Claude Code to approach problems in a very specific way. And I sort of now have, as a developer, might have an intuitive feel for what that certain way is. And so if you switch me off to something else, that's uncomfortable. Like this actually may end up being a little bit of a moat, and I think we've talked a lot about that. What are the switching costs of moving between models? They seemed up to somewhat recently to be fairly small, but when it comes to specific use cases like coding, they may end up being bigger, and it may be bigger because of these harnesses and the sort of unique approaches that they take.
I do
Well,
I do
oh, go ahead.
think though that we need something like this to find ways to bring down these costs. So I think that this is the market working in a way that it should. We'll see what happens. The problem is that the US economy is so dependent on these very few companies and their spending that it really creates a kind of a condition of frailty for the whole economy if these companies are undermined, or if there isn't a response that is effective without sort of getting into government intervention.
Yeah.
But we'll see what happens there. But that raises the whole specter. Oh, go ahead. Did you want to make another comment?
Well, yeah, there's so this is ends up being so complicated. I mean, the overspend on the data center side has been so extraordinary. We're going to talk a little bit about some fuzzy accounting that may be employed
Right.
in that, and so these companies need to make some real revenue to start being able to pay down the debts associated with that. And meanwhile, there's all this pricing pressure now because of this, the Chinese side, and actually companies using these tools saying, even at these cut rates that aren't making it work for OpenAI, for Anthropic, this is too expensive. So that something's gonna give, something's got to break. And then the one last thing I can kind of say about that, and then I think we're going to segue into this sort of bubble thing is, there's speculation that the Chinese are actually product dumping, right? So one way to really cripple a competitor's competitive industry is to dump products in the market, as the Chinese did with steel at one point,
Right.
essentially eviscerating the U.S. steel market.
Right. I mean, I think that's a very interesting perspective that maybe we should defer for another time, that this is all part of a strategy that is being used to not only compete with American AI companies, but to harm the American economy itself. I mean, I think that that's not entirely out of the question, but nonetheless, the market needs the competition. So let's talk about the Enron accounting here, and then we can talk about the bubble. Um, just as a kind of a piece of background information, Google reported earnings this week. They had a very, very strong quarter, kind of across the board, except they reported a $5 billion negative cash burn, first in their history, that where they have had a negative cash flow, and investors were spooked by that, and sent the stock down. And so this is debt that is being acknowledged by Google, or not debt, but spending that's being acknowledged. But there's all kinds of debt that is apparently being hidden, or marginalized, or downplayed. Talk about that a little bit.
Yeah, so this is I would call it, I put it in the kind of breaking news category. It's a few days old, at least as I understand it. there's speculation that most of the major companies that are doing major AI deployments are using some of the accounting tactics and techniques that were used by Enron. We all remember who those guys were, to essentially hide or park the debts associated with their spend elsewhere, basically off the books, off the balance sheet for these companies themselves. The mechanics for doing that essentially involve setting up what are called special purpose vehicles, these separate companies that are the ones that hold the debt. And then that debt, through rules that are too obscure for me to understand well, allows it does not actually show up on the main company's balance sheet. And that was the crux of what Enron was doing that got them into so much trouble. And there's some speculation that the same thing or something that at least rhymes is being used in the case of these major companies. And if that's the case, first, it explains a little bit about how it could possibly be true that these enormous data center expenditures are happening and they're not impacting the income of these larger companies the way that you would expect them to. And it would be cause for quite a lot of concern that, in fact, the true cost of doing this and this what is probably an overspend is not being accurately represented.
Right. And I mean, I'm not a securities lawyer or an accountant, but it seems to me we get into the realm of fraud here a little bit. We start nudging over into this investor, we get some investor lawsuits, some class action lawsuits against these companies for not fully disclosing the extent of their liabilities. And, I mean, that may not be right, but it seems to me, it feels like we're in a really gray area with this behavior.
I mean, it does to me too, and not an accountant. So two things that strike me. One is this story about Google with a negative cash flow of $5 billion is interesting, and I don't know because again, I haven't dug into it, and I'm not an accountant. But one way that could happen, one thing that a lot of investors will say is cash flow doesn't lie, right? You can do all kinds of fancy stuff in terms of the way that you represent income and where stuff looks or shows up on the balance sheet. But cash is cash. It's one of the reasons that famous investors like Peter Lynch or Warren Buffett over-indexed on cash flow. You can't really hide a lot doing that. So one explanation for that $5 billion net negative cash flow is that is money flowing out into data center costs, offsetting or maybe it's even sort of an anchor down payment kind of a thing against the debt used to build this stuff out. I don't know, but it would suggest that there's at least some attention being paid at the level of Google to signal like, hey, this is costing real money. The second thing that strikes me is Enron was one company in an industry that was quietly and secretly doing this. It would be somewhat surprising to me if 5 or 6 of the largest companies in the U.S. were doing things that rose to the level of fraud, together all at the same time. I'm not saying it's impossible, but it does seem weird to me that would be the answer. Unlikely.
You would think that they would be mindful of the dangers of doing something that was um, intentionally deceptive or
Yeah,
fraudulent.
I could see. I mean, I like if it was just OpenAI doing it, I'd be like, yeah, sure, this that would check out. Like Sam Altman, like
They're all talking very publicly about their infrastructure spending. They're saying we're going to spend this many billions. So there is that, right? I mean, that's being disclosed. Maybe it doesn't show up in these earnings reports or in the balance sheet in a very prominent way, but they are making these statements overtly that would seem to mitigate some of that potential misleading
yeah,
behavior. But
seems like it.
let's talk about the bubble. I mean, there's been talk for well over a year, maybe 2 years, from certain kinds of critics that this is all a bubble. There's just no way to recover the money being spent. People are delusional. So, and Cory Doctorow, who is the source of the term enshittification, which is a description of what happens when companies, kind of mature and start to monetize everything, came out in a number of different contexts and very loudly and with certainty saying, "Oh, we're definitely in a bubble and the bubble's going to burst," and so on and so forth, which would be very bad for the economy, of course. But it just feels intuitively, it feels like that's a correct assessment.
Yeah, I think it does. I agree with that, and I agree with him. I mean, I think, a lot of discussion and terms being thrown around. Oh, we're in a bubble; it's going to pop, all that kind of stuff. It's worth kind of just reflecting for a second what that actually means. And you've said it. A bubble happens when people over invest in an area, and it gets to a point where the revenues or cash flow generated from that investment can't possibly cover the investment over any meaningful, reasonable amount of time. So, in the case of something like a data center build out, as you might imagine, a lot of times what they do is they raise debt to build those data centers, and that debt has a term on it, maybe 10 years. And so every year you need to pay back some of that in order to cover the very significant costs of that data center. Well, if you don't have enough revenue offsetting the debt to that you need to pay on an annual basis, it's just not going to work. And so bubbles tend to take that form, right? Ton of money invested in a space with the expectation that there's going to be offsetting revenues that allow people to recoup on their investment, whether that's on the debt side or the equity side. And right now it appears that we are hopelessly behind. And by we, I mean the AI companies in the US, hopelessly behind monetizing their investments, where they just cannot afford to pay down the debt or promise a reasonable return to their equity investors. So that's kind of what we're talking about here.
Well, and this is where the Chinese open source models come into play, which puts
Absolutely.
pressure on these companies' ability to charge and to acquire customers. And there was some reporting that OpenAI appears to be way behind its sales targets. I don't know the accuracy of that, but that's been reported, and I'm not surprised if that's true. I mean, they're promoting these very aggressive revenue growth numbers, and it may be very challenging to reach them,
Yeah.
which go ahead.
No, well, I just was going to say, I was just agreeing with you. And if we think through what that means in terms of the way the bubbles burst. So, the only way to kind of keep this going is for more money to flow into it that is not revenue. Because these companies that aren't making the revenue numbers, what that means is that they're not able to service the debt or have a growth story that keeps equity investors interested enough to put more money in. So at some point, the wheels fall off, and the initial signs of that tend to be things like we're missing our revenue numbers. That's an instant pause button for equity investors putting more money into it, and it's an instant yellow or red flag for debtors who are looking at lending more money to these companies. The other signals we've seen with OpenAI is these hints that they're selling a portion of themselves to the U.S. government. That's really just a way to get somebody else to fund the losses.
Too big to fail, too important to
Too
fail.
big to fail. Yeah. So then what happens? Well, what happens is that, typically is that one company like OpenAI misses their numbers, can't raise money, and all of a sudden is distressed. And when that happens, everybody else gets a magnifying glass on them, and everybody hits the pause button on putting more money in. And if you do not have revenue that offsets your monthly cash flow needs, you hit the wall. And that's how bubbles burst.
A sort of adjacent example is the SpaceX IPO, which is now, quite a bit underwater from when it went public, and that's a different case in a certain way. And Elon Musk is a sort of an variable, so to speak, there, but it indicates a loss of confidence by investors in the ability of that company to generate revenue to justify that valuation.
Yeah, yeah, that's right. And I think, yeah, so coming back, I mean, because you're right, SpaceX is sort of a unique case in in a different
It
category.
is. It
'Cause
it
Elon
is.
Musk
It's
is
not
a
a.
different category.
It's not a pure AI company, and it's Elon Musk,
Yeah,
and it's got all this
yeah.
other junk in it. Yeah.
Yeah. I'm sure that there's another example of a personality driven, investment that's also bubbly. But here's the thing that I think is interesting, coming back to Cory Doctorow. So look, he's a very interesting, smart guy who's had a lot of incisive pieces over the years on technology. So what he says about this that I think is meaningful is that bubbles are if I guess one way to say it is a natural occurrence in markets when there is, especially when there's a disruptive technology where nobody's really quite sure what it might do over time. That's a good environment for a bubble to happen. And we've had a lot of them over the decades, centuries, et cetera. Even something like tulip mania
Right.
in
Right.
the,
Yep.
like in Holland was an
That's
example of that
the
way back
tulip
when.
the tulip hysteria or frenzy. That's the
Yeah.
quintessential example of a market bubble.
It is. That's right. So what he points out is that market bubbles, when they pop, end in one of two ways. The first way is they have created nothing of value and they disappear and they're gone. The second is they have created something of value and they leave that something behind. And then that something becomes leverageable by a new generation of technologists, entrepreneurs, industrialists, et cetera. And so the tulip mania thing, I suspect, is an example of the
The
former.
former.
What it
Yep.
left behind is a bunch of rotting tulips. Now, the railroads and more recently the fiber optic
Broadband.
cable,
Yeah.
yeah, broadband thing where WorldCom famously went out of business. Those are examples of the latter, where what's left behind is actually not just valuable, but perhaps like foundational to what happens next. So you could imagine a scenario where, in fact, this is probably what's most likely to happen, where these companies are under real financial distress, and somebody is able to pick up these data centers at pennies on the dollar, because the companies, essentially that are owning them go bankrupt or have to divest themselves of them, and show them huge loss.
Yeah, I mean, I think that's a fascinating scenario and something we can talk about in a future episode. One of the things that is happening, I think, is the need to so OpenAI has three revenue streams. They have consumer subscription or subscription revenue. They have ads, which is just getting going, and then they have kind of enterprise mega accounts. And Claude has only two of those, but one of the things that's interesting is the need to put more to accelerate the ad revenue. Google on its earnings call said, "Oh, AI gives us so many more opportunities to monetize search because we now have visibility into intent in a way that we didn't before, and there's just so many more searches going on, and so we could put ads against all of this stuff." And um, the 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 thing that Google is doing behind the scenes with AI mode is that it's really redirecting. It's delivering answers by relying on its own content and its own properties like YouTube and Google Maps and other things. And so it's creating a kind of, it's not entirely closed, but it's creating more of a closed ecosystem to create more opportunities in part for monetization, for more ads, whatever the particular channel is. And that raises the whole question of whether or not, what happens to the open web. There are many people who have talked about decried the decline of the open web. Google used to send tons of traffic. Now it's sending much less traffic, and as a consequence there will be fewer incentives to create content, business models will atrophy, and so on and so forth. And there was a piece in Media Post this week which was based on, I'm trying to look, a variety of sources. They put together a number of different data sources to compare, um, use of the open web yesterday versus today, and it starts in 2000 and goes to the present. And the presentation says in the early 2000s, everything was the open web. It was all just a bunch of different websites that people consulted for various purposes. And that was true through that decade. But as we got into the middle of the 2010s, we started to see the rise of social networks, in a kind of a more social networks that were trying to capture and keep attention. And so people were spending a lot more time there. And now we've got AI, social networks, and the open web. And the contention is that 75% of time is now distributed between social and AI. That may not be true, but the directional comment is that the open web is withering on the vine, and that only a minority of time is spent with the open web, and that these kind of quasi walled gardens are eating up the rest of the time, which is a kind of ironic return to the beginning of the web with Prodigy and AOL and CompuServe and those kinds of services. What do you think about all that, John?
Yeah, so I think it's really interesting what's happening on the open website. I think 10 or 20 years from now, we'll look back, if we're still all around and haven't been destroyed by AI, and see the kind of what I think is a fascinating kind of cultural trend over time. And it's not really clear where it's gonna end up, where we're sitting now, but it'll seem obvious in retrospect. If we look back on early internet days, whenever anything, a large number of anythings like websites are created, you tend to end up with one of two distributions. There's a normal distribution, which we've all seen as bell curve, and there's what's called a power law distribution. And we're, as the open web has eroded, we're in this power law distribution where just a few websites take the bulk of the traffic. This is the way that movies work. Just a few movies get most of the revenue. It's the way books work, but it's not the way everything works. Now, the reason for that with the web is probably largely algorithmic, and what that means, two things happened that have concentrated the power in just a few websites. The first was Google's search. So the fact that most people don't go beyond the first few results on Google started to concentrate power pretty dramatically. And it became essential to be in that top 3 or 4 on Google, and really everybody else got left out. And then the second was the algorithms associated with the dopamine engineering or hacking of social media. So, in that case, folks like Facebook or Meta and YouTube, Google just got really, 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 really good at capturing and keeping our attention. So all of a sudden, people were just not as drawn to going to the open web. So look, I think this is the open web is dead. Long live the open web. I think it's that kind of a framing.
Well, I mean, one way to look at it, I'm this is a different discussion, but I'm concerned about the business model of certain kinds of publishers, news publishers in particular, surviving. But discovery shifts potentially from traditional Google search, although that's evolving in real time to being much more AI centric, to AI and social, right? I mean,
Yeah,
one of the primary places to build your brand or to build awareness outside of search is social media. And
yeah,
so there may be a scenario where in something like ChatGPT or TikTok slash Instagram slash Reddit, whatever, people can build sufficient awareness to keep themselves going. The thing that's interesting, I read a report pretty recently that said, unlike in Google, traditional Google, in ChatGPT, there isn't there's no small number of brands that dominate results in each of these categories. There's much more variability, and there's much less predictability about who is showing up for some of these prompts, which I think is an interesting and encouraging thing. It's anxiety producing for all these companies that have been doing SEO and have been used to a certain level of traffic from Google. But I think from a broader perspective, it's a good thing, assuming that the results that we're getting have some basis in reality. It's not like
yeah.
who's the best provider of this, and then it's like, on Monday I get this one, Tuesday I get the next one, and it's all just sort of random. I mean, I don't want to be too apocalyptic about it. I think it's an interesting and important discussion. I don't think things play out in ways that are often unexpected, and so I
Yeah.
don't think it means the death of everything if the open web, you know, is not the thing that it used to be.
Yeah. Well, I also wonder if there's an interesting counter trend that happens here, which is I think it will become and has become harder than ever to carve out sort of niche publishing or niche business stuff that plausibly is part of the open web. But I actually wonder if as that stuff suffers, the special interest niche stuff that is not revenue focused, hobbyist, enthusiast stuff actually starts to have more prominence. Like there's, we've been driving a boat around here on the lake, and there's this forum, and I can't remember what it's called, but it's something to do with Malibu boats that has been around for 20 years and is the single best place on the web to get information about Malibu boats and maintenance, including,
Right.
recent models. And I just sort of wonder if that actually, as all this other stuff disappears, starts to kind of climb back up, rise back up in the ranking.
Well, that would be a good thing because that would be content that was genuinely valuable. I mean, we've got a lot of crap content, questionable content, AI slop, deceptive content that's now per- permeated every nook and cranny of the web. One thing I'd like to say before we sort of go on to your notes from the field is that I think in many ways the web has become just polluted with questionable stuff, and that sends people into trusted corners where they feel safe, comfortable, familiar. I think one of the appeals of AI, one of the attractions of AI is that I can eliminate a lot of the open web browsing from my product discovery or from my research. I can start with a question, I can compare different providers, and I can create a short list in much more efficiently and without the need to go out to a lot of sites that I don't know about. I mean, those are behind many of the recommendations that are being made, but just from a user experience perspective, I think there's something much more potentially trustworthy about using something like OpenAI or ChatGPT versus doing 10,000 Google searches, reading a
Mm-hmm.
bunch of self-promotional copy and that kind of stuff, you know? And
Yeah.
so there's maybe a way in which users are rationally responding to what's going on. They're choosing environments where there's less slop and crap and questionable content, you know?
Yeah. I think that would be amazing, by the way, if that's a filter that gets applied that, it sort of carves out this little space of authentic interaction and content that people, start to gravitate to and that draws more people in.
Well, so okay, I don't think we're going to get to our surveillance fashion item, even though it's really fascinating. There was an article in the Guardian rather that was talking about how people in the UK, in London in particular, where there's a lot of cameras, surveillance cameras, CCTV, are adopting clothing that are designed to frustrate and confuse those cameras, and it's now becoming kind of mainstream fashion, which is really interesting, but something for another time. So, John, finish us off with your notes from the field today.
Sure. So look, this was an interesting week for me in my relationship with my AI agents. And one of the things I've noticed, and this has been over the course now of a year and a half or 2 years or whatever, is just how much we anthropomorphize, how much we attribute human behaviors and intentions to the agents that we're working with. And just a couple of things that struck me that were really funny. So I was working on a project at the cabin. The septic system of all things started to fail, and so I needed to do a deep dive with Claude's help on what to do. And it was very interesting to me how I felt like Claude was very specifically managing my emotions around this not so exciting task that I was
Yeah,
embarking on, and seemed to be
reassuring you, helping you. A
reassuring.
com-
Yeah, like
yeah,
in fact, at one point, I even said, sort of in an exasperated, chat, it listed all, here's the steps. You're going to get a sump pump and you're going to do this and you're going to connect that and you're going to do that. And I just said, look, there's a 0% chance that this is going to work. So instead of being sycophantic, it actually said, well, let's just hold on a second and let's think through this. Which part of this exactly is problematic? And let's see if we can help you walk through that. And that was actually the thing that unlocked a solution, and we have a functioning septic system now as a result of that. So
great.
very interesting note. Yeah, and I'm gonna save my other note from the field, which was a little bit more about an AI agent that went a tiny bit rogue for next week, which was also a fascinating note from the field, and another sort of a bit of the story about the evolving relationship with AI. But I'll save that for next week.
Okay. All right. Thanks, everybody. Thanks, John. Like and subscribe, tell your friends, and we will be back next week with more exciting adventures in the world of AI.
Thanks, Greg. That was fun.